Welcome back to Midcap Radar. The next corporate on our radar is SP Apparels. The company saw muted revenue growth in Q1 while their margins also were under pressure. To discuss this and more on the Q2 performance, P Sundararajan, the Chairman and Managing Director at SP Apparels, joins us now. Good afternoon, Mr. Sundararajan. Thank you so much for joining us. First up, Q1 appears to be slightly soft. What was the reason for that? And going forward, Q2 onwards, do you expect to see a recovery? And can you quantify the recovery in case you expect?
Sure. In Q4 we had some pressure on the workforce mobilization, which used to be our challenge before, and the orders what we have booked, we had to delay the shipments in Q3, so it got delayed automatically. So we immediately reduced our order book in Q1 shipments, and to make sure that everything is back to normal. That's the reason why this has been Q1 is flat. There was no growth in it. But however, for Q2, we are back to normal, and Q3 we will be making big jumps on this one. And with regard to the margin also, because of the late delivery, there are air freights, and in addition to Red Sea issues, and air freight was exorbitant. So we had to pay out all the air freight charges. So that has let down the margins to some extent.
Okay, so exports were impacted because of freight rates, something that we've been hearing from other exporters as well. Mr. Sundararajan, so can you confirm you have a guidance of 15 to 1600 crore rupees in terms of top line this year and 7 to 10% guidance for the organic business? Do you stick to that? And what is the margin band that you're looking at?
See, the margin is, as I always say, the EBITDA margin is about 18 to 20. So we are able to maintain more or less that one. So we still continue to maintain that.
Okay, sir. So you have a top line guidance in the range of 1500 to 1600 crore. Q1 you've done around 250 crores. So the ask rate for the rest of the year is quite steep. And even when you're talking about the EBITDA margin, it's coming at close to 13.5%, and you're giving us a guidance of close to 18%. So what is it that is happening on ground that gives you the confidence that you will be able to beat it? Is it simply because most of the issues you had in terms of the workflows is now done, or is there also significant demand uptick?
Yes, we have been able to mitigate the workforce challenge, and we are back on track now. And yes, because the Q1 was lower, but Q3 and Q4 we are expecting to be, average it out. And in addition to that, whatever we said about 1500 crores is including young brand acquisition, which is about 300 to 340 crores of business. So adding that, we would be able to maintain that top line. And with regard to the bottom line, also we would be able to maintain this. This 13 is because of this Q1 is because of the air freights, but we will be back on track from Q2 onwards. And I'm confident that we are working towards it and will be able to achieve it.
Okay. Mr. Sundararajan, while we're talking about Q1 numbers, a lot of other updates have started happening in Q2, and the Bangladesh unrest is one of them. What is your sense? The street is very excited about this for the garment industry in India. Are you seeing any shifts, any demand inquiries which has come by from other countries to India or SP Apparels because we are seeing a visible shift from Bangladesh? What is the impact across the value chain because of this?
Yeah, see, this is, is immediately that the whole market has reacted. See, this Bangladesh issue it's not a new thing. This has been happening for several years, unsafe building stability is an issue, fire safety issue, and workers unrestness. So all these things have been happening all these years, and the retailers have been already planning to divert some of the business from Bangladesh, because they were putting most of the orders to Bangladesh because it was duty-free thing. But already they have started moving little bit from Bangladesh to Vietnam, Cambodia, India, and Sri Lanka. So that is what is anyway happening. So what they all feared has happened this time also. It was not something that they could take a decision all of a sudden. This has been an ongoing process, and because of this reason and China plus one strategy, we have got the business for Sri Lanka production, which is going up and running now.
Okay, so give us a sense of the input cost pricing, and going forward, how do you expect to see net realization trends pan out?
Net realization per piece, you mean?
Net realization for the garment segment.
The garment segment, there will not be any change. That's what we feel. There is not going to be any change in that net realization.
And how are input costs? Are you seeing any pressure on that front?
No, it's not. See, because because of this Bangladesh issue, the yarn export might take a hit a little bit for the time being until it is restored completely. So the yarn demand will come down here in India. So yarn prices might come down or it will be maintained. But at the same time, there will be order inflow will be much to India because of China Plus and Bangladesh one. So everyone has to work towards increasing their capacity. And we are geared up for it because we have a new project coming up in October, November. One new project is coming up, and we are also increasing our existing setup and Sri Lanka operation and acquiring a factory like Young Brand one. So all these things, we are ready for ramping up of this capacity growth.
Okay, so a lot is happening with the company and the sector overall. Yarn exporters have already started talking about some demand issues from Bangladesh, so that tends to do well for for companies like yourself. Mr. Sundararajan, thank you so much for joining us today and giving us your insights about the company and generally the industry as well. So exciting time looks like that for the textile industry going forward. We'll do one thing, we'll slip into a short break. On the other side, we'll focus on some stocks reacting to their Q1 earnings and a lot more. Stay tuned.